Hey everybody, so I want to make a helpful little video on how you can analyze any stock on a simple basis by using a couple of free tools and websites that are available. So we're going to start with just a website called Companies Market Cap. So what this website does is it lists all the stocks in the world by market cap. So I want everybody to get away from looking at stock prices. In fact, the true valuation of any company is reflected in its market cap or how much it's worth. So this is a website, companies market cap. And what you can do is you can come down and it has everything listed. As you can see, Microsoft recently overtook Apple to be the largest company in the world. And you can see why. That's a $2.530 trillion market cap. And we see Apple at 2.468. And then we have some of these other companies, mostly in the US, Saudi Aramco in Saudi Arabia, TSMC in Taiwan, Tencent, etc. So when you want to know the market cap of any company, this is a website that you can come through. And if you just want to look up something, it'll list it here where you can look up, let's say, Square. Let's look at that company. And in this instance, it will list it's ranked 144, has a share price of 236 and $109 billion valuation. So that's the first free tool. And I want you to get into the habit of looking up the market cap for companies, right? But then we're going to come to the real tool that I want to show you today, which is Yahoo Finance. And today I want to show you how you can analyze or get key pieces of information from any stock just simply by pulling it up. So first, you're going to come to Yahoo Finance, and then we're going to look up Microsoft as the first one. And then what you see, the company will come up. And so overall, for everybody who's new to investing, this is a simple snapshot of a company. The ticker symbol and the company's name comes up at the top, the current price, 336.99. You have a recent chart, and this chart is relatively useful. You can see a 5-day, a 1 month, a 6-month, year-to-date, 1 year, 5-year, etc. And what do you want to see from, especially we know that Microsoft has been a good company, but you can see it's had a very long run from approximately 10 cents to $336. But more importantly, there are other nuggets of information that you can get from this snapshot of the website. If you give it a look, you have the market cap, 2.53 trillion. Another component is the beta. The beta gives you an idea of just how volatile any stock would be. Above 1 means it's more volatile than the S&P 500. Here we have an example where Microsoft is less volatile than the overall stock market. And if you scroll down a little bit more, you'll have more information like relevant news, financials, annually, quarterly, recommended trends. You also have buy rating based on analysts. You also have the overall analyst price target. All right, out of 38 analysts, we currently have a price target of average price target of 357.27. And here we can see the stock currently trades at 336. I don't want you to be beholden to what analysts think. In fact, I want to train you to think the opposing views from analysis. And that means love a stock when analysts hate it and learn to want to take some profit when everybody loves it, right? And then we also have one of the more useful indicators, the company profile, which is the address, website, but also the sector that it belongs to, which is technology. And this is a software infrastructure. And then also a description written by the company of what this company does. All right. So here we have all of that information. And today I'm just going to teach you the nuggets so that you can quickly find that information on any basis. So when you want to pull up a stock and understand, okay, how do I evaluate this company, right? And as you become more familiar, you're going to look at more things that are available by using this free tool, Yahoo Finance. You can go to statistics, and we won't get into this right now, but this is where you can get even more information like price to sales ratio, price to earnings ratio. And then another useful nugget that I'm just going to provide for you on this video right now, and I'll discuss it quickly, is revenue, right? And for especially if you want to understand how quickly you can expect your stock to double, one of the tips that I utilize is the quarterly revenue growth. And here we have an example where Microsoft's quarterly revenue is about 22%. So this gives you a general idea that the stock doubles about every 5 years or so, which is a little bit quicker than the S&P 500, which doubles every 7 years. Here we have Apple, where we have the same thing. You're going to pull up Apple, and you can see it has a $2.468 trillion market cap. You can look at the relevant charts, etc., and get all of the information you need. Again, we have a beta of 1.21, suggesting Amazon is a little bit more volatile than the stock market. And over time, we'll come to understand, what does this mean? How do I incorporate this into buying or evaluating the stock? We also have Amazon 1.769. Then we have Tesla, a $1.168 trillion market cap. So this is just how you can pull up any of these stocks on Yahoo Finance using the ticker symbol. But what I want you to do is, especially as we come to Invest Club, I want you to be able to utilize this information. And so here I've pulled out this information just to show you, when I look at a stock, what are the pieces of information that I'm pulling out, but more importantly, how am I evaluating this stock? And there are a couple of key questions that you want to ask yourself, right? So if we pull up Apple, here we have Apple. I put up the chart over the past day. This was actually yesterday, and you can see just how it traded, but also you can look at the 1 year, 5 year. What is the price? The market cap of 2.49 trillion. I provided the information. What is the industry? Consumer electronics. The beta of 1.21. It also has a dividend of 0.58%. And one of the key pieces of information that I want to highlight, or get you in the habit of learning as we grow as investors and become better, looking at charts is one way to become a better investor, because there's information that a stock can tell you over time and how it trades and how it is invested in by other people. And so one of the key aspects I want you to consider is, how much of a high are we from, right? The old adage is we want to buy low and sell high. Well, here you can see that Apple is currently trading almost at the high, a little bit about 4% from the 52-week high, right? If you're interested in the stock, or if you're invested in a stock, you always want to buy when there's a pullback. So if there's a 10% pullback, that's usually a good time to buy. Anything more, even more so. But some of the questions you want to ask yourself, in terms of Apple, what are its strengths? Well, we know cell phones, computers, iWatch, App Store. Is it in a growth industry? Yes. And one of the ways we can come back is, I showed you where you can find the revenue percentages on Yahoo Finance. The rule of thumb is that any company that has above a 10% revenue growth rate is a growth company above. And we saw that Apple had a 22% revenue year-over-year growth rate, suggesting that it is a growth company. Is it an industry leader? Well, Amazon is the #2 company by market cap, the #1 cell phone maker, etc. So we know that Apple is an industry leader. Who are its competitors? Well, we know Samsung is a competitor, Microsoft is a competitor. That's very important as you come to evaluate companies. Who are their competitors determines just how good of a stock it is. If it's a company, if it's a smaller company with a large competitor that may want to compete with Apple, then we have to understand that they're facing an uphill battle. And then we have the historical performance. So I pulled up this information by looking at what was Apple's price when it went public. And this was, I think, approximately 1980. And it's had a 137,000% return over that time. That equates to an annualized return of 27.66. The other question you need to ask yourself when you look at a company is, who is the CEO? In this case, is Tim Cook, and this is probably obvious to you at this point. However, you want to know who is running the company. When you invest in a company, you're giving a company a loan of your money, right? So you want to know, who are you giving that money to? Who is the CEO and what are they going to do with your money? And so that's what it means. You're investing in the company, yes, to grow your money, but essentially you're giving Apple a loan, right? And so financially speaking, you're giving Tim Cook your money, and you want to know, okay, what is Tim Cook credentials? How successful has he been? How long has he been with the company, and how has the company performed while he's been CEO? This is an obvious question for Apple. We're all familiar with, we know Tim Cook has done a tremendous job as CEO, but this is for practice for when you come to new companies that we may not be as familiar with. All right. And then the last question you want to ask yourself when you're evaluating a company that you want to invest in, what is next, right? You can look at a chart, you can look at past performance. If we look at Apple, 137,000% return since it went public. However, past performance does not dictate future returns. I'll say that again. Past performance does not indicate future returns. Yes, by all means, Apple has been a successful company, but if you are giving Apple your money today, you need to know what is going to cause it to grow, and that comes from knowing what is next from Apple. And for in this case, we know that Apple is getting involved with healthcare. The Apple Watch has been a part of that effort, but also Apple has announced that their next growth aspect of the company will be the Apple Car. That's a well a ways off, approximately 2025, but you want to know that before you're invested, to know how is your money going to grow, by what means. So next, I did the same thing for Amazon. I did the same thing. I pulled out the chart. We know that it has a price of approximately 3,500, a market cap of 1.78 trillion. Its industry is e-commerce, which is within the tech sector. Again, that beta of 1.11, right? So this indicates that the stock is more volatile than the normal stock market. However, this also indicates that when the stock market is up, that Amazon will probably be up more than the regular stock market. Amazon does not have a dividend, and right now is approximately 6.73% from the 52-week high. So what that does suggest to you is that you have at least about 6-7% to get to those highs. So we like investing in companies that are pulled back, that are not right at the highs, that are not making new highs, because if you're investing in a company that is at the high, essentially you're saying you are investing at a point to where this company has never been before, right? If I invest now today in Amazon, what this says is, I know it has been to this high before, and so a 7% return is the minimum I can look forward to. However, by investing in the high, you have absolutely no idea how high this stock could go. It can obviously go to it can appreciate for a significant amount. However, you have no track record to base that assumption on. And so the strengths for Amazon are e-commerce. It's the #1 e-commerce company in the world. AWS, which is the platform that Amazon has pioneered. We also have Amazon Video. And one of the larger growing industries or sectors within Amazon is advertising, especially advertising within their platform and video advertising. Is it in a growth industry? By all accounts, yes. Is this an industry leader? We've already said this, yeah, yes, #1. And then who are the competitors? Amazon competes across the board with companies like Shopify that let people set up their own shops, online e-commerce stores. Also, it competes with Walmart, Target, it competes with Netflix on a video streaming, it competes with Google and Microsoft. What is the historical performance? Well, since its IPOs in the 90s, Amazon has returned 228,000%. That equates to an annualized return of 34.58%. And then who is the CEO? It used to be Steve Jobs, but Amazon recently got a new CEO, Andy Jassy. So if you didn't know that, then you haven't been paying attention to what's been going on with Amazon. And if you own Amazon and you didn't know that, that's an even bigger problem, right? You want to know who is your CEO, who is going to grow your money for you. And then lastly, we have what is next for Amazon. We know Amazon is also very interested in healthcare. They're also interested in groceries. They recently bought Whole Foods, and they've been looking to grow and expand that business with home delivery of groceries. There also have been job postings for crypto, which Amazon has projected some interest in, and also e-gaming. Amazon owns Twitch, which is the largest video gaming streaming platform. And so they've spent a lot of money and investment into growing that as a growth sector of the business. So by all accounts, you can expect by what is next, or the many levers that Amazon has to pull, that Amazon is looking to grow your money further by investing in them. And now I'm going to give the last example of the information that was pulled out of Yahoo Finance, or that I pulled out. And here we just have an example of the max chart for Tesla. And as you can see, this has been a pretty significant growth. But what you have is, again, the same information. The price, approximately 1,200. Market cap, 1.22 trillion. Tesla just hit this market cap about a week ago. Its industry is EVs within the automotive sector. It has a beta of over 2. So what this says is that that Tesla is twice as volatile as the normal stock market. That is good and bad. What that means is when the market is down, Tesla may pull back more than the market. But what it also means is, and what we've seen from a return of Tesla, is when the market is up, Tesla can be expected to be up twice as much or even more than the stock market. And lastly, we know that Tesla hit new highs just last week, but it's trading right at the high. So for me personally, I don't like to invest in stocks at the high. So at this point, if I'm not already invested in Tesla, this would be a scenario where I prefer to sit on the sidelines and wait until it pulls back a bit. And even in Tesla, the gift and the curse of a high beta of above 2 in a stock like Tesla is that, yes, it does have tremendous growth and has appreciated significantly since its IPO in 2010. However, what you also have, it tends to have significant pulls back. Just this summer, Tesla pulled back from a highs in February of approximately $900 all the way down to approximately $550. And now it's again up at $1,200. So this is where that beta information is informative. If you cannot stomach volatility, if you cannot stomach a stock that's going to pull back about 50% each year or every other year, then you should not be invested in Tesla. I know everybody wants to see the gains, but if you're not the type of person that can handle their $100 going to $50 or their $1,000 going to $500 on any given day, then Tesla is probably not the stock for you. And then, so we know that Tesla's strength right now is electric vehicle. Is essentially, although it did not create the first electric vehicle, it has taken it to the next level. And now they have the entire world and auto industry following their lead. Is it in a growth industry? Yes. The electric vehicle sector is a burgeoning growth industry. Is this an industry leader? Number one electric vehicle producer in the world. And who are the competitors? We know that GM is a competitor, Ford is a competitor, Lucid is looking to be the Tesla killer. And then we also have what is a historical performance. Over 10 years, Tesla has done over 30,000% return, which equates to an annualized return of approximately 66%. And who is the CEO? Elon Musk, love him or hate him. He's the captain of the ship for Tesla, and he's done a tremendous job of growing your money if you've been an investor in Tesla. And then lastly, what's next for Tesla? And that is globalization, right? They've been looking to grow their entire portfolio across the globe. They have plants in Germany, plants in China. So it's really taking Tesla from being an American company to a global company, but also expanding the cars. We have the Model 3, the Model S, we have Plaid, we have the X. I'm starting to lose track, but we also have several new models coming up. We have the Cybertruck that's highly anticipated. And then also I saw just today, Pepsi announced that they expect their first delivery of Tesla semi-trucks. All right, so these are the trucks that haul 18-wheelers, right? And so those are looking to be delivered for the first time either at the end of this year, early beginning of next year. So now we know there are multiple areas of growth for Tesla. And if you're investing today, you're looking for more globalization, for Tesla to sell the Cybertruck, which will equate to more higher revenues. And lastly, the semis is also another component. So that's my tutorial on the simplest version on how to pull up a stock and how to evaluate it for the basic needs of wanting to be an investor. If you're pulling the trigger on a stock and you don't know the market cap, you don't know the sector, you don't know the beta, you don't know if it's trading at a 52-week high, and if you don't even know the CEO, then there's a problem. Then you need to take a step back and understand, what am I investing in? Trading is just trying to get a gain, trying to make a quick buck. Investing by definition means you plan to be invested in this company for over a year. And if you are giving a company your money for more than a year, then you should know what they intend to do with your money. Anyway, that's my time for today. Hope this has been helpful. And we plan to do more of these. So yeah, leave a comment if you found this useful. If you like it, if there's anything else you wanted me to help with, to talk about, describe, just let me know.